Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, news a sense of caution is noticeable in markets ahead of tomorrow's US Fed meeting. But first, the overnight dairy auction was another soft one, falling for the sixth time in the past 7 events with a 1.3% decline. But this time there's a kind of a silver lining because the New Zealand dollar is at a 2-month low. So in New Zealand dollars, the overall price rose 0.6%. The key whole milk powder price slipped 1.8% and the skim milk powder price fell 1.7% from the prior auction. This continual set of slippages may be starting to have analysts reassessing their bullish farm gate milk prices for the upcoming 2021-22 season. In the US, there's been a range of second-tier data released overnight, and most of it was disappointing, even if markets are ignoring it ahead of tomorrow's US Fed meeting results. American retail sales slipped in May from April, and the slippage was more than expected, but it is still 21% higher than for May 2019. Consumers are pulling back from buying big-ticket durable goods now, but now spending more on consumption like eating out, in a notable shift. Factory input costs rose rather sharply, up 1.5% in the month to be 6.6% higher than a year ago. Service costs didn't rise as much, however. US industrial production rose a bit more than expected in May from April. It is now 16% ahead of the pandemic-affected year-ago level, but still 0.6% lower than in May 2019. Canada's factories are facing sharply higher input costs too, jumping the most in more than 45 years. And German inflation came in pretty much as expected at 2.5%, and this was despite fuels rising more than 10%. In Australia, their central bank released the minutes of its dull June meeting, but there was an interesting tidbit in the record of those discussions. The RBA wants to see quicker wage growth to help spur inflation towards the target. But they are seeing firms acting not to raise wages by adopting non-wage measures to attract and retain staff, such as one-off bonuses and more flexible working arrangements. Some firms are also opting to ration output because of labour shortages rather than pay higher wages to attract new workers, they say. And the US Treasury 10-year yield starts today unchanged at 1.50%, and the price of gold starts today at $1,857 an ounce, which is down another $6 from this time yesterday. And oil prices are up more than $1 overnight at just under $72 a barrel in the US, while the international Brent price is still just on $73.50 a barrel. Demand from China is supporting this price. And the Kiwi dollar opens today at 71.2 US cents with a minor devaluation since this time yesterday. Against the Australian dollar, we're firmish at 92.7 Australian cents, and against the euro, we're softish at 58.7 euro cents. That means our trade-weighted index starts today at 73 and a 2-month low. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.